with you in more detail through the program. Julia, I just wanted to get your thoughts, particularly on the levels as well, but just what you were seeing going on in the market today.
Friday at the moment, it's all about earnings, and earnings season is important because often it signifies the start of a new trend. So we get a lot of information during earnings season, and if we have a look at today, we're still reacting to some of the earnings which came out yesterday. Yesterday we saw stocks like Computershare quite heavily sold off, but today a bounce back of 2.5%. Car sales was up by 2.9%. It also came out with its results yesterday. Commonwealth Bank was relatively flat, but CSL continued to fall down by 3.4%. So that's a concern, and that's a stock that we're watching very carefully. We have a look at CSL shares over the last 1 year. The shares have done extremely well, up by about 60%. But of course, with the latest fall, we're just watching some key support levels coming in at $63 and then $57. But watching to see whether this is an inflection point for CSL after a few years of very strong performance, whether we are seeing some weakness now coming into the shares. But intraday, if we have a look at the Australian market, not too much happening. I guess the other space we were watching very carefully were the gold stocks. We saw gold prices up by 1% in New York and then up by 0.2% in Asia. And really gold's just moving around with tapering expectations and the US dollar. But today, a good day for the gold subsector. We saw Oceana Gold as well as Panos up by more than 6% and Newcrest Mining up by 1.3%. And of course, earnings today very much in focus. AMP doing well, up by 3.5%. Wesfarmers not so well, down by 1.6%. But altogether, you know, we have to watch the lead up and how the shares have performed in the lead up to this earnings result as well.
From Wesfarmers, as Chris mentioned there, you know, on the one hand you had that capital return, but that offset obviously by other worries, particularly that coals business today.
I think that capital return was a surprise, and Chris mentioned that Wesfarmers doesn't have a lot of franking credits, and that's the reason why a lot of people in the market weren't thinking that we were going to see a capital return this time round. But that 50-cent capital return, a good surprise for the market. We have seen some shifting of some of the Coles properties as well as the Bunnings properties as well. So a bit of a shift and moving some of those properties off the balance sheet. Good news for shareholders and seeing a capital return there. Coles was up by 13.1% in terms of EBIT, and that was on the back of sales of 5.2%. So it is a very competitive area, and it's probably an area in where the majors are seeing more and more investment going in. We're seeing different layouts being rolled out, and in the case of Woolworths, we're seeing more and more stores being laid out and coming out. And probably in the case of Woolworths, what we're seeing is a little bit of cannibalisation in terms of sales. But I think the key weakness in terms of this Wesfarmers result was Target. That actually came in below expectations. We know that they're trying to get rid of excess stock and they're trying to amalgamate distribution centres as well, and not helping what they're trying to do in terms of the turnaround plan is the warmer weather that we've also been seeing, which has impacted. So unfortunately, Target coming in below. But insurance was a standout, $205 million. That's compared to $5 million in the previous corresponding period. We have seen a lack of catastrophes there, so that's really been helping out. But all in all, a solid result coming through. And I think part of Wesfarmers' underperformance today has to be attributed to the fact that it's been one of the best performers in terms of the top 20 on the Australian share market. This is a stock that's up 27% over the last 52 weeks and up 12% in 2013 alone. So it is a stock that is quite expensive at the moment. A solid result, but I guess a lot of profit takers also coming in, given that we have seen such a good run up.
Up on the program, but was talking about expectations that there will be an improvement in that insurance business in the medium term. Julia, what was your thinking on that outlook?
I think this is a key example of a business that's struggling, and yet, you know, we've seen the share price up by 3.5% today. And I guess we have to remember that it's all around expectations, and AMP going into this result had already downgraded expectations, and the stock was down by 2.3% in 2013. So going into these results, there were extremely low expectations, but of course we saw a beat in terms of the numbers that they gave out and the expectations that they gave out back in June. Also, when we have a look at companies and share price rises, often there's a catalyst behind a share price rise, and whether that's a new strategy, a new product, new management, these are often things that we look for to try and determine which companies may be seeing aggressive price moves. And in the case of AMP, it looks like there's going to be new leadership. So one of the key things we'll be watching out for is a new strategy. As you mentioned, Bridie, that insurance, the life insurance business, a really difficult area at the moment. There's a number of things that are happening happening across the whole industry, and it's not just AMP. What we are seeing is that policy claims are much higher than previously, and also there's a lot of lapses in terms of policies as well. In fact, policy lapses are around a 10-year high for the industry, and these are things that AMP is battling with at the moment. So it looks like they're trying to bring in some new measures to temporarily halt that, or permanently halt that as well, and that's trying to work with people to try and bring them to work a lot sooner if they are applying for things like income insurance or trauma and disability. So it's going to be interesting to see how some of these new strategies play out. But I think a key thing for AMP over the next couple of years is going to be a new vision, a new strategy, which will come with the new leadership.